It's my pleasure to welcome Sujoy Bose to this IDFC Institute conversation. Sujoy is the CEO of the National Investment and Infrastructure Fund and is based in Mumbai. And prior to that, he spent about a quarter century at the IFC, which is the private sector lending arm of the World Bank Group, as a global co-head and director of infrastructure and natural resources. And I believe you oversaw some $12.6 billion portfolio and have now recently come back to India to start your new venture. So tell me, what were the origins of the fund and what needs is it trying to address, Sujoy?
The purpose of NIIF is it's a fund that's anchored by the government, but also works in collaboration with other investors, other large investors. And the idea behind the fund is actually to invest equity capital into the infrastructure sector at scale in a commercial, with a commercial approach. And what we want to do is over time create large scale counterparties for both foreign investors as well as for the government to develop and build infrastructure at a large scale.
So presumably there was a gap, a missing piece of the puzzle, and that was what you're trying to fill with this fund.
There's certainly a large deficit of equity capital in terms of the scale at which it is required. Over the last year or two, what we have seen is some of that equity capital has started to come in. But there's also a lot of equity required just to simply clean up projects that are either stressed or stranded.
Right.
And on top of that, as India grows, I think the infrastructure deficit is well known to everyone.
Correct.
And there's a large amount of equity capital that is required, that will be required as India scales up infrastructure.
Yeah, absolutely. Could you share with us how is the fund managed? What are the processes you use? Who regulates you, that kind of thing?
Technically, the fund is a alternative investment fund category 2, which is regulated by SEBI. The way that the NIIF is structured is that we have 20,000 crores from the government, but that money is not in one fund. It allows us to do multiple strategies with that capital. Each of those strategies is invested through a separate fund. And currently we have 3 funds registered. The funds are actually trusts which are set up under the SEBI guidelines. And the manager, which is NIIF Limited, is the manager which manages all those funds under oversight of a board and a trustee. And the board of NIIF is composed of members from the government, directors from the government, but also directors from other investors and independents.
So you've got government monies, but do you also have a separate pool of private monies? How does that work, Sujoy?
As I mentioned, there are currently 3 funds set up. And of course, I mean, as we are developing NIIF, we are approaching it fund by fund. So the first fund, which is what we are calling the NIIF Master Fund, is a fund that is focused more on consolidating operating assets, which is a need of the hour. And we have had a first close of that fund. So Abu Dhabi Investment Authority, ADIA, was the large commercial investor into that fund. And we have also 4 of the private Indian institutions who have invested in that fund. And now we are progressing to raise more capital. Ultimately, we expect this is going to be roughly a $2 billion fund. I'm talking about just
this one particular fund.
Just the master fund, with
right.
Half of the 49% coming from the government. And then alongside that, we will also have a pool of co-investment capital, which will be substantial. So we'll be able to invest that fund at scale, for the purpose that I just described.
So far you have not begun lending operations, is that right?
We are not lending. This is actually an equity fund.
No, I stand corrected. So, but have you begun infusing money into projects? Is that already underway?
So in January, we invested in our first investment. What we are trying to do with NIIF is to do things that are bold and large scale. And what we have invested into is a joint venture with TP World from Dubai. And what we are creating in that joint venture is a large-scale ports and logistics platform. So the idea is to create a company, an operating company that is integrated in terms of EXIM logistics as well as domestic logistics, such that the movement of goods and containers becomes much easier between origin and actually port, origin, destination, and also origin and port and destination. And under that platform, we have made one acquisition, which is one of India's larger logistics companies, which basically has a combination of PFSs and ICTs. And the idea is to then connect that with the existing port infrastructure, terminal infrastructure of DP World, and thereby create that integrated platform that we want to do.
I see.
We also were, I'm very happy to say that we had made suggestions to the government on how to design the TOT transaction in the road sector, and we were also able to provide confidence to the government that we will certainly bid if it was done right, and I'm delighted that it was a well-structured procurement by the government in terms of the selling of 9 road assets in Gujarat and Andhra Pradesh. I'm also delighted that we were actually able to bid, and I'm also delighted that of course, it would have been great if we had won, but I'm delighted the fact that the government was very successful in getting a bid on that transaction, which was well above their reserve price. So all in all, we are working on making policy suggestions to the government. We are providing comfort to the government that if they bring large transactions to the market, we will be there with capital and with the right operating expertise to bid on them. And also, we are actually investing in companies and platforms to basically do infrastructure at large scale. I should also mention that the second fund is a fund of funds. And our idea behind that is, as much as we will invest in companies, we also want to support the creation of a fund management ecosystem for the infrastructure sector. This industry has been through ups and downs because of some of the problems that Indian infrastructure has faced in the last decade. And we believe that we can play a strong role in supporting good fund managers build a fund management business. Under that fund, we have already made one commitment, which is to a fund that we have named the Green Growth Equity Fund. It's a fund that's going to be focused on renewable energy, clean transportation, water, sanitation, and waste management. We've been able to bring in almost 120 million pounds, actually not almost, but 120 million pounds from the UK's DFID. And we have invested a similar amount of capital. And we've actually got a couple of very strong partners, a large manager of funds in India and a renewable energy developer from the UK who have formed a strong joint venture to become the manager of that fund. So we've actually already started investing in multiple strategies.
I see. And what is the third of the 3 that you mentioned? You've told us about 2 of them. What's the third one?
So the third of the, so of course, what we are doing is we are developing our business step by step. So the first focus was to establish the master fund, achieve a first close, and start investing. We've done that. Second is the fund of funds. It's already public information that AIIB is looking at this fund of funds as an anchor investor in it, and we've already started investing under the fund of funds. So our second strategy is also fully operational. The third strategy that we are still in the process of finalizing is something that we want to really, is something bold that we want to try. And we are testing it currently with investors, but the idea would be to create a large-scale, very long-term fund, which allows us to look at substantial and important projects where we are also able to take greenfield risk, but in a commercial manner. There are such funds in other countries, in Europe, for example, in the US, and we are hoping that we will be able to create this kind of a fund for India.
In fact, I'm going to ask you, since you raised that, what are some other, so this is new for India, but given your background and your experience with the IFC, I mean, are there similar such funds in other big emerging economies, and how have they performed, or how have they done?
So several countries, both in the developed world as well as in the developing world, have started creating what's called strategic investment funds for infrastructure as well as more generally. This has been tried in Italy, Spain, France has had it. Canada is trying to put something like this together. Russia, Nigeria, Indonesia, they've all done this. India has actually had a track record in creating institutions such as this. IDFC is one example.
Of course.
And
so
IDFC,
that's the lending part, and you're...
It was originally started from the lending side,
right.
but it also ventured into equity.
Correct.
And over the years, it has played, institutions such as these have played a critical role in developing the infrastructure ecosystem. What we are is slightly different in the sense that we are equity, we are commercial, and we are being, we are sort of conceived to be in collaboration with commercial investors, which many of these other countries were not able to achieve. I think in India we have been able to achieve this because India is seen as investors as a strong investment destination. It has three critical things that most outside investors look for at the macro level, which is economic growth, and economic growth driven by fundamentals such as demographics and reform, rather than simply commodity prices, for example. Second, stability, macro stability, which India has seen over the last several years. And finally, the concept of ongoing reform, and of course reforms such as GST, the NCLT, and all these reforms play very much into what investors like to see in terms of long-term development, and hence we've actually been able to, and of course that goes hand in hand with micro factors such as setting up the right governance, and we've actually put in place very strong governance for this fund. The investment decisions are actually are made by professionals, not by either government representatives or investor representatives. And also we've been able to put together a team that is seen by the investors as the right team with the right expertise and the right track record to actually ensure that we get good returns out of this fund. Hence, I think the unique bit about what we have been able to do in India is that we've actually been able to get commercial capital to partner with the government's capital to start up NIIF.
It sounds very exciting. What are kind of the pitfalls or dangers that you see that you're going to have to be mindful of as you go forward?
I think there are several things that I focus on a day-to-day basis, and our investors and our board also is very focused in ensuring. I think top of everything else is governance. So governance of what we are doing has to be world-class, top-notch, and absolutely and focused on building credibility. That's one. Second is, I think NIIF also has to be able to make a difference both for the government as well as for the investors. So if all we do is we do the same transactions that investors are seeing through investment bankers, I don't think we'll have really made a difference. But if we are able to, through our I would say, position of being a public-private partnership, able to open up sectors and invest and create proprietary transactions that are not seen by the investors, then I think that'll be another step.
That wouldn't otherwise have happened. So it's not that you're crowding out some other private sector
Our goal
monies.
is to crowd in capital into sectors and into investments. And finally, of course, we have to be making credible investment decisions which are seen by both the government as well as the market, including investors, as being the right thesis, having the right diligence, and having the right structure to make sure that we are able to bring the best of our expertise, the best of our governance, and put our best foot forward in generating commercial returns out of these investments.
So in a sense, given that these are commercially viable projects, again, wearing my hat as an economist, so in some sense the market failure you're correcting is perhaps a gap in information, that these are not projects that perhaps are known, or there's some asymmetric information issue here. Was that a fair way of looking at it, that you're filling an information and a knowledge gap as much as you're doing anything else?
That's part of it, and there are several other aspects to it. I wouldn't say so much as filling a knowledge gap, but really bringing, first of all, I think we have a strong role to play in supporting the government to continue to open up infrastructure sectors for commercial investors with the right structures that attract in international and domestic capital in a stable manner. Second is there are also very few domestic investors who have the ability to invest at the scale that we can.
So so scale is another issue.
And I think scale is also an issue. Yeah. And finally, which I think is probably in our strategy we are trying to, we are implementing, is there are also a limited number of counterparties in India that bring to bear all the various aspects that large-scale capital needs to see when they come into investing into infrastructure. And what we're trying to do, so if you really look at most international capital that comes into India, they work with a very limited number of counterparties. And what we are also trying to do is increase the number of counterparties so that there are credible counterparties both for the government as well as for the international investors and actually domestic capital. Over time, I think we have to find a way to bring more pension and insurance money.
Domestic monies.
Domestic money into the infrastructure sector, because ultimately infrastructure needs local currency and domestic capital.
Correct. Let me ask you, Sujoy, I mean, how does your IFC experience help you with what you're doing now in India?
Well, IFC is, the learnings that you have working in 40 emerging markets in the infrastructure sector and other sectors over 25 years is clearly, is definitely what guides a lot of, at least my understanding of the infrastructure sector and of international investors. But personally as well, there are parts of my IFC career, including the fact that the current IFC office in Mumbai was built by me, and I was in Mumbai for 4 years running IFC's Mumbai office, then spent almost 5 years managing a large IFC fund which had money from other investors, from large sovereigns and pension funds. And finally, as the global head of infrastructure and natural resources, running a large portfolio in emerging markets, including a fairly large portfolio, $2.5 billion portfolio in India, has clearly fed into a lot of the ideas that I bring to the table. And finally, I think also a critical part of NIIF is actually to be able to work with the government. And again, I think the background of IFC has certainly helped in understanding more, not just the private side of things, but also the public aspects of the infrastructure sector.
Indeed. And maybe just as a last question, Sujoy, I mean, you mentioned economic reforms as one of the drivers of investment in India. I mean, if you sort of had 5 minutes to make a pitch to the Prime Minister or the Finance Minister, I mean, what would be a key reform that you think is still either unfinished or not yet done? What would be at the top of your wish list of reforms, of unfinished reforms?
I actually think that the reforms that have been put in place over the last 2-3 years are very positive in terms of creating an opportunity set of investments over time. So, our ports and logistics platform plays very well into GST. I think the whole concept, if I look at the infrastructure sector and its history, I think the fact that a lot of infrastructure was built over the last decade and is now offering investors not just the opportunity to build infrastructure, but also to actually buy constructed operating assets, I think is very good. And there also the NCLT approach reform is a good one because it forces resolution of issues. My pitch actually to the Prime Minister and the Finance Minister would be to continue to focus on implementation of these reforms. I think as we implement NCLT, I think some of the sector aspects need to be looked at. So clearly the power sector issues are well known, and I think focusing on the distribution side of the business, focusing on ensuring that as stressed power assets get reformed, the investors coming into those assets don't face the same problem with distribution, offtake, payments, etc. Is very important. I think the next cycle people have to make money. And finally, what I would also say is that this is a great time to attract capital into India. There's a lot of money waiting to come in. And I think focusing on sectors such as the airport sector, which is currently, the whole aviation sector is going through a strong growth, a period of strong growth, and there's a lot of interest in the airport sector. And focusing on sectors such as the airports to actually see how it can be opened up to more private capital, as the road sector, as what has happened in the road sector, I think would be sort of my wish list, which is really more focused on looking at each of these pieces and looking at the reforms that have already been done and really pushing through the implementation, which I think is going to lead to a lot of investment opportunities for not just domestic investors but also international investors.
Makes a lot of sense, and let's hope that the optimistic scenario plays out. I think as long as we have folks like you, I think it's going to be a very interesting time in the Indian economic scene. Thanks so much, Sujoy. It's been a real pleasure.
Vivek, many thanks. It's been a pleasure.